We start the question with cash, cost of investment. We start with the cash payments. Then share consideration is next. Then deferred consideration. Then we also have contingent consideration. The loan notes. We have applied question on cash. Let's take to share consideration. And deferred consideration, apply question on it. Yeah. What is share consideration? Let's write a short note. What is share consideration? Share consideration occurs when a parent issues its shares at a market price. When a parent issues its shares at a market price to acquire controlling interest in subsidiary. It occurs when a parent issues its own shares at a market price to acquire controlling interest in subsidiary. Yeah, that is share consideration. What are the things to know? Things to know under share consideration. One, it must be issued at market price per shares of the parents. That is it. Two, if the market price per share of the parents cannot be determined in any question, then that of the subsidiary should be used. That of the sub should be used. That's the second. Three, in case there is no share premium in the parent accounts. Parent accounts. Share premium accounts must be created. That is it. Therefore, the following accounting entry must be raised when share consideration is tested. Yes, when share consideration is tested, provided it has not been recorded. Provided it has not been recorded, what do I do? Cost of investment, debit. Equity shares, credit. Share premium, credit. Provided it has not been recorded, this is the accounting treatment. Provided it has not been recorded, this is the accounting treatment. That is the things to know under share consideration. Don't forget what is share consideration. When a parent issues its own shares to acquire the controlling interest in subsidiary, it does not pay cash, it issues shares. Things to know, it must be issued at the market price of the parent, but in case we cannot determine the market price of the parent, then that of the subsidiary should be used. Then 3, in case there is no share premium in the parent account, share premium account must be created, and the following accounting entry must be passed. But when there is a share consideration, it's tested, provided it has not been recorded. Now, if it is recorded, you all know our credit investment and debit cost of investment. You must know this thing very well. You must know that very well. Any issue? Now, what about deferred consideration? So we now use that, the two of them, deferred consideration. What is deferred consideration? This occurs when part of full cost of investment will be paid in a future date. When we promise to pay in a future date, the parent acquired the subsidiary, they promise to pay in a future date. So what is the accounting entry to raise when there's a deferred consideration? The present value must be debited to cost of investment. The finance cost must be debited to the retained earning of parents. Then I'll create a liability. Either non-current liability or current liability will be credited. Now, don't forget, present value is determined by using the formula present value equals to future value, bracket 1 plus R, or raised to minus N. But this accounting entry is suffice if it has not been recorded. Not recorded. That is, they've not posted. This is what I will replace. Present value equals to future value. What is FV? Future value. How much you want to pay in a future date? At what rate? Money you want to pay in a future date? At what rate? Rates. which is the interest element. The interest element, which is also known as cost of capital. We also call it unwinding interest. Ordinary rates. Then N is the numbers of years. Numbers of years. From the date of acquisition to date is paying it, date of payment. From the date he acquired to date of payment. Now, the trap they use to test when am I consolidating from the date of acquisition to date we are consolidating. Sometimes it can be less than the date of payment. We will not get the interest. I will show you with question. You will see what I'm saying. Now, we have talked about share consideration. We have talked about deferred consideration. We have talked about share consideration. We have talked about deferred consideration. Can we apply them to a full-blown question so that you can see what we are saying? Good. Before we go there, is there any question for me? Don't forget, cost of investment, there are 5. Is there any question for me? Well, let's take PEP and more. I think he has it too. PEP and more. PEP and more. Yes. Are you there? Have you seen the question? PEP and more PSC. If somebody wants to ask a question. Please, I beg you, you not be asking. I don't have material. How? The material we have sent is how many days? Please shout Mr. Wasi for the material. We don't send to the this is the same material we are still using on the simple group.
Sorry, I didn't get the material the last time. So I think I missed the last class, but I checked my mail. I don't have the material.
My own duty is to send to Mr. Wasi. And his own duty is to forward to everybody that has paid for this lecture. I don't know why you are not getting into.
If you can share on the group, we appreciate it. I don't know if other people are having the same challenge. Except the things which I get regularly, but the material has been a challenge.
Share on the group. It is forbidden to share on the group. We have said that if you have anything concerning material link and every other thing, shout Mr. Wasiu. He's always there to provide a solution. I will advise you to shout him. For control purposes.
Okay, you can carry on.
Please. Any other question? Any other question?
I have shared the material. You can go and check the group.
Thank you.
Even that is not allowed because they said some people are not part of this online. They have the material. So let's go to Peppermint question. Immediately give me the question, I've seen that it's consolidated based on the requirements. So, okay. Prepare a consolidated statement of financial position to PEP as at 30th June 2015. With this information, I will open everything. Okay. Now you have told me I will now open everything in exam. Why do I need to open it? To get mark first. I will not, as I'm reading, I'll be posting it. But the first thing, I will first of all get mark by saying, okay, the question PEP. Consolidated statements of financial position as at okay 30th June 2015. 30th June 2015. 2015. Now, the first thing, PPE. PPE of the parents, 55,000 plus 28,600. Financial assets, 11,500 plus 6,000. Then goodwill. I will leave two line space. Go to the current assets. Inventory. 17,000 plus 15,400. Trade receivable. $14,300 plus 10,500. Bank. 22 plus 16. Total assets. Equities and liabilities. You have the share capital. You retain other equity components, other equity components, retain any, NCI. Put the NCI, the current liability, which is 25,800 plus 8,100. Total equities and liabilities. Good. To balance this account in exam, I will start putting what I need. First, we need the group structure. What do I need again? I need adjusted retained earnings. Adjusted retained earnings of the subsidiary. Okay. Let's see. We need adjusted retained earnings of sub. As per SOFP. I also need determination of net assets. I'll open that. It's okay. Determination of net assets of who? A subsidiary. After determination of net assets, I need goodwill. Don't forget the formula to calculate goodwill. I open everything down, at least to earn something. Okay, I need my goodwill. You say goodwill. Cost of investments, patch, NCR, purchase consideration, net assets, date of acquisition. I don't know whether there will be impairment in the question. So, don't know yet. I need to retain any of the parents. I need to retain any, which is the consolidated retaining, 10 of the parents. As per SOFP. I also need the NCI. Okay. NCI, date of acquisition. This is what I will do in exam. Look at it. This is what I will have done in exam. When something, this is what I will open down. When something, After I've done this, I will now start posting. Oh, return is too near. So everything, okay. SCI, let's go to SCI. Okay. Immediately I've done that, no problem. I will now start reading the question and be posting. This is too near. As I read the question, I will post. Why the NCI figure is too close to return it because we don't see it. Exam, I cannot make that mistake because I'm seeing my book. Then, after this is done, I will now start reading the question from the beginning and I'll start posting to increase the mark. Date of acquisition. This is it. I will start now reading the question and I'll post. Let me read. So let's open another page for the working. These are working sheets. These are working. Okay. I'll read. PEP question. On 1st January 2015, PEP PSC acquired 75%. Oh, they've given me, I increased my mark for one post. After I've opened everything, next thing, I read their post to make it fast and exam. It's okay. You acquired 75%. No problem. I do the posting. I go to the group structure that I've opened now. It's okay. Where is the group structure? Parent 75. It's okay. Parent 75%. NCI 25% to increase my mark. Okay. Next. Of more units on 1st of January. He has given me the date we are acquiring. When do we consolidate? We acquire 1st of January. When are we consolidating? 30th of June, 6 months. Don't forget, during the year acquisition, nobody will give you retain any. I will calculate myself as at the date of acquisition. We are still coming there to analyze it properly. So no problem. Also, date of acquisition, 1st January 2015. Date we are consolidating, 30th June 2015. So this is how many months? 6 months accounts. Good. What will ring in my head during the year acquisition? No retain any at the date of acquisition. And I said, okay. By means of immediate share exchange of 2 shares in PEP, for every 5 shares in more. Oh, through shares consideration, it does not pay cash. It uses shares. I will remember those things that I need to know about share consideration. When it is share consideration, it must be issued at the market price per shares of the parents. If there is no market price per share of the parents, that of the subsidiary cannot be used to. Then, if there is no share premium in the financial statement of the parent, I will create it. Then, fourth one, the accounting entry. Equity share must be debited, share premium must be credited, then cost of investment will be debited. It is 2 credits against 1 debit. That's okay. I will now ask the question. Before I can do the exchange ratio, don't forget for the exchange ratio, it must be parent over subsidiary. Okay? And I said, no problem. He acquire. What is the total number of shares before he acquires 75%? I'll say, what is the total number of shares in subsidiary equals to values of shares all over nominal value. What is the values of shares in subsidiary? If you go to the share capital of subsidiary, he has 20,000 in value. What is the nominal value? Each one of them, you trace it, it is 1 naira. Naira cancel naira to give you 20,000. This is at 100% unit of shares he has in that company. He now acquire 75%. Good. You now say, oh, parent acquire shares. Shares now equals to 0.75 times 20,000 to give me 15,000. That is it. How does he pay? Say share consideration. Don't forget, share consideration can be tested in 2 ways. One, exchange ratio. One, when there's exchange ratio, the other one, issue direct. Oh, he has given me the exchange ratio. Don't forget, when I say it must be parent over subsidiary, the question will tell you how they exchange it. Don't forget, it must be parent over subsidiary. Let's read further. The question says, by means of immediate share exchange of 2 shares in PEP, the parent now. 2 shares in PEP for 5 shares in more. Oh, parent over subsidiary. 2/5 times how many shares he acquired? 15,000. I will now ask the question. What is the market price per shares? This will give me 6,000. What is the market price per shares of the parents? What is the market price per shares of the parent? See how we apply the share consideration. What is the market price per shares of the parents? The question will tell us. In addition, okay, on the fair value of pair and more shares on 1st January 2015, are 4 naira and 3 naira respectively. Oh, he has given me market price per shares of the parents to be 4 naira. But he also give me the market price per share of subsidiary. In exam, he give me that of the parents and he give me that of the subsidiary. Who can tell me the reason why he give us that of the subsidiary? Who can tell me the reason why he give me that of the subsidiary? Who can tell me the reason why that of the subsidiary was given in this question? Hello? We have done this. Who can tell me the reason why the market price per share of subsidiary is given? last week, we said when it is fair value. How do I know? What are the indicators of fair value? What are the indicators of fair value? Say one. How do I know? What do my indicators? How do I know that NCI is valued as fair value? We said market price per share of subsidiary or NCI will be given in the valuation. That is one. Two, we said fair value of NCI. Fair value of NCI will be given in the question. Three, we said goodwill attributed to NCI will be given in the question. Then we said fair value of the whole subsidiary. We said one of these four must be present in any question, plus the group policy. Where am I going to see group policy? Additional information. Additional information will tell me what is the group policy. I will know it is fair value. I will quickly post that mark. Let's go now. I can pause here. Oh, he has given me, that means it's a fair value. I'll go to additional information. What is the group policy? I'll go and check. If we go to additional information, 6, per policy is to value non-controlling set as fair value as at the date of acquisition. For this purpose, you telling me more share price at the date, as at that date, is the representative of the share or the fair value of the shares held by the non-controlling interest. I can get the value of NCI direct. How many shares in the company? 20,000. Variant acquires 7%, which is 15. The remaining belongs to NCI, 5,000. Market price of 3 naira. I can quickly post that to help my mark. Just go to the home that's giving me market price per shares of the subsidiaries. I can put what I'm being told. It's okay. Oh, yeah. And you know, go to my goodwill calculation and NCI the date of acquisition. Oh, add NCI. I'll just say 5,000 times 3 naira, which is 15,000. Second leg, I will debit cost of investment. NCI the date of acquisition. What is NCI the date of acquisition? I'll go and check. NCI the date of acquisition. Or post immediately to enter mark. NCI 15. Straight, no stories. That mark is sent. I'll go to what I'm doing again. Before I go to the exam hall, I know everything before I enter. Because group account is repetition in nature, the same way it used to come all the time. Go and check. They acquire valuation of NCI, net assets, adjustments, same way. I will go to the question now. Go back to the question. Okay. Let me get my cost of investments. Oh, market price per share parent is 4 naira. I can now get the cost of investments. Don't forget, what is the cost of investments? Unassigned cost of investments to be debited, 6,000 times 4 naira. So give me 24,000. Equity shares to be credited. Equity shares. To be credited. Oh, 6,000 times the nominal value of the equity shares, 1 naira, to give me 6,000. Has it created premium? Yes, share premium, which I'm going to credit. Oh, I'll now say for the premium, when we start the business, it was 1 naira. But today, I issue it at the market price of 1 naira. He has given me the premium by saying 4 naira minus 1 naira times 6,000 to give me 18,000. Don't forget, If it has not been recorded, cost of investment will be debited. Equity shares credit, it is 2 credits against 1 debit. It is 2 credits against 1 debit. I will ask the question, has it been recorded or not? It's my own duty to investigate. Has it been recorded? Let's ask the question. PEP has not recorded any of the consideration for more in the financial statements. PEP has not recorded any of the consideration. I will pause. He has not recorded, I will record. Please, you need to know the difference between when it is recorded and when it is not recorded. And how do I know it is recorded? How do I know it? It's a language of group accounts when it is recorded or not recorded. Believe me honestly. You will be seeing it in the group. This cost of investment. Don't forget, cost of investment are 5. How can we acquire cash? Cash does not have problems so much. We can use shares, we can use differ, we can use contingent, we can use no or combination. You can test me 2 or 3. Go to 2020. When we get to fellow subsidiary, we'll solve that icon question. He tested 3, tested contingent, he tested differ, and he tested cash. Please take note. Ask me a question before we proceed. Ask me. Don't forget, how do I know it has not been recorded? How do I know it has not been recorded in the question? 1, is that the question stated clearly it has not been recorded. 2, when it is silent. And 3rd one, through investigation or go and check. And this question is telling us it has not been recorded. When it is not recorded, what is my own duty? I will record. What is accounting entry when it is recorded? Look at it. And even this share consideration is recorded now. What do I do? Cost of investment, I will debit. Plus investments, credit minus. That is the only thing you will do. That is the only thing you will do. When it is, because you will see it in the financial statement under non-current asset, you go and remove it. You will go and remove it. Now, let me pause this now. It has not been recorded. I'll pause. When the mark, we say equity shares. Let me go to the question. The financial statement I've opened up. Equity shares. Oh, good here. Share capital. What is the share capital of the parents? I will check. The share capital of the parent in the question initially was 20,000 plus is it 6,000? Let's check. 6,000, 18,000 premium. Good. I will credit. If I'm crediting share capital, I'm adding to it plus 6,000. It does not have share premium, but it has other components. Not to waste my time of creating share premium account. I will create other, it has other components. I will put it order. What is the other component of the parents? 4,000 plus 18,000. Recorded. I'll go to the goodwill to go and post the cost of investments for the goodwill. Oh, 24,000. Because that is not the only cost of investment you use. Say in addition, that is it. Please ask me a question. You must know this thing. Ask me a question, please. No question is foolish. Ask me a question, please. Ask me a question. I am with you, 100%. Ask me a question. Well, ask me a question. Ask me a question. Okay. In the absence of no question? Oh, good. So am I working? Don't forget, as I read, I pause. No time to waste. Six. In addition to share exchange, where we make a cash payment of 132 kobo per shares acquired, differed until 1st January 2016. What is deferred consideration? This occurs when part of full cost of investment will be paid in a future date. I don't have money now. I want to pay it in a future date. That is deferred consideration. No money now. I will acquire, but I'm going to pay you in a future date. Don't forget, what are the entries? What are the things to know when it is deferred consideration? The money you want to pay in a future date, what is the value today? That money you want to pay in a future date using the relevant cost of capital, you discount it to the present value. The future value. It's okay. What cost of investment is this? Deferred consideration. Deferred. Oh, goodness. Deferred consideration. The formula, present value equals to future value, bracket 1 plus R, or a super minus N. PV stands for the present, today, present value. FV, future value. Then the rates. And from the date of acquisition to date we are paying. When am I paying? This question will tell you is the rate, is the numbers of years. And the numbers of years, we start from the date of acquisition. Numbers of years. That's it. If you go to the question is say is going to pay my PV, I don't know. Future value. Say it's going to pay 1 naira 32 kobo times for every shares acquired. You only acquire 15,000 shares, not 20, not 6. It was due to share exchange that we have 6. Then, what is the rate of capital? What is the rate of capital? 10%. Don't forget, 10% can also be written as 0.1. Numbers of years from the date of acquisition to date you are paying, how many years? Until 1st January 2016, they acquire 1st January 2015 is to pay 1st January 2016, 1 year. Don't forget, they asked me to consolidate This is the trap. Anytime there's a deferred consideration, when am I consolidating? From the date of acquisition to date of consolidation is 6 months. 6 months. Meaning I only need interest of 6 months. Go on. I only need interest of 6 months. I will now put it into the formula. 1.32 times 15. What does it give us? 1.32 times 15. Stop. 1.32 times 15.
$19.8.
That's all. I will now put it into the formula. I've gotten out everything. I'll just go to the formula.
Sorry, Mr. Kazim.
What is it?
So, sorry. So the 6 months is 6 months out of the 1 year.
Yes.
The 1 year of date of acquisition to date of payment.
That is for the 1 year to get your numbers of years. But I'm only paying for 6. I'm only going to look for interest of 6 months because I'm consolidating for 6 months. It is doing the year acquisition. And that's okay,
yes,
no problem. Okay.
So my question is, so if for example the number of years is like 2 years, so it will be 6 months out of 2
Number
years.
of years is what?
I said let's assume the number of years is 2 years.
Good.
So it will be 6 months out of 2 years.
Yes, now, because I'm only consolidating. This is the date, from the date of acquisition to the date of consolidation, we will determine the interest I make. But don't forget to get the numbers of years. You will see it now. Let's do it. You get everything clear. I will now put it. Present value equals to future value 19,800 bracket 1 plus 0.1. The rate now, the numbers of years now, 1 year. If it is 2 years, I'll put the 2 year. That means the present value equals to 19,800 bracket 1.1 raised to power minus 1 minus n. Yes. No, it's 1 all over. It's over minus n. On the formula, there's a minus n. So the present value will now give us what? What is the present value? I will now say 9,800, 1.1 raised to power minus 1 times 9,800.
$18,000.
What is it?
18,000.
18,000. But I will now say determination of finance cost, the interest. Which is the present value equals to future value. Future value equals to present value plus interest. What is the future value? 19,800 equals to present value 18,000 plus interest. I will collect the lifetime. I say 19,800 minus 18,000 equals to the interest. How much is the interest now? 98, man, that is 1/8. Equals to the interest. This is interest of 1 year. This is the interest of 1 year. Only need interest of how many months? 6 months. One, 1/8. That is it. The accounting entry to raise present value must be debited, which is 18,000. Finance cost, who will suffer it? Account of the parent, debit. My liability now, or credit, is only 6 months, which is what? 18,900. I can also use amortized table. It will still give me the same thing. I can also use amortized table to get the interest by saying, look at the amortized table. Year 1, present value, 18,000. At what interest rate? 10%. Closing liability. 10% of this will give me 1/8. 1/8 plus this will give me 19,800. But I only need interest of 6 months by saying 6 months, 1/8 by 6/12. The same thing. Any question? My brother is asking question. How far?
It's clear.
It will be clear. When we apply it, it will be clear. We said it has not been recorded. This is my accounting entry to post. When it is not
Sorry,
recorded,
sir, I have a question, sir.
I'm with you, madam.
Sir, are we not discounting the interest?
We will not discount the interest. It's the visual
Okay.
value we discount to the present value.
Okay.
Look at it. What is the visual value? 9,800. In 1 year's time, what is 9,800 will give us in 1 year's time? What is the interest element for the whole 1 year? It's 1/8. But we are consolidating for 6 months. We did not discount the interest. We only get the interest. But we discount the visual value to get the present value. If you add the interest plus the present value, we give you the visual value. What is going to be 20,000 in 3 years' time? What is the value to the? If you give me the inflation rate, I will know through the formula. So based on this interest rate, this is 20,000 in 3 years' time. This is the value we are going to receive. Any other question, please? I will go to the financial statement that I've opened up.
So,
Ma'am, Yes.
So for subsequent period, the only thing we'll be recording now is the interest balance that we
It
accrued.
does not concern you again. Definitely in
Okay.
practice, that is the remainder 100 will be suffered in the next year. Definitely. But what the question wants us to do, we have done to consolidate within 6 months.
Okay.
Let's go to the TC to post, my brother. He said, who will suffer the interest is the parents. I will go to the account of the parent, the liability, credit. Don't forget, if I'm crediting a liability, I'm adding to it, plus 1800. I'll go to the finance cost, retain any of the parents to go and debit his account. Finance cost. I will now go to the goodwill calculation to debit investment, cost of investment for my goodwill calculation. That is it. That is it. That is it. The cost of investment is 42,000. This will not give me purchase consideration. 57,000. Let's say in exam, I submit this to you. Are you going to give me mark for what I have done? Let's say the question is 30 marks. I want to hear your view. How many marks are you going to allocate or reward me with for doing this so far? I want to hear from you. Out of the 30 marks, that is why we always advise students. Open everything, open it. Now, after you have opened, you have received some mark, you have attempted the question. Now start following it bumper to bumper. As you read the post, all the following information here, I will not go back to it again. All the following information, I will not go back to it again. I will go to the next. Let's go to the adjustments. Before we go there, let me test your accounting knowledge. Who can give me the return of the parents in the question? And that of the subsidiary. Let's fill in the gap. As per SOP, what is the return of the parents? And that of the subsidiaries. Parent and son. Let's fill in the gap. Who can give me? Who can give me the return of both the parent and subsidiaries based on the question? Who can give me? Who can give me the return of the parents? Because I can use to test this thing, and I used to ask myself, this is not trap. Let's go there. What is the return of the parents? Both the parent and subsidiary. As per SOFP, what is the return? As per statement of financial position. I'm listening.
As per statement of financial position, what we have is 26,200 and 14,000 from what was given.
Which one are you talking about? For the parent one?
Yeah, for the parent is 26,200.
For the subsidiary,
14,000.
I disagree, my brother. I completely disagree.
No, sir.
I completely disagree.
That is 24,000 and 10,000.
I completely disagree again. I can use to test this thing. And I used to ask myself, is this trap? There is no trap in this. No trap at all. How? It's very clear. Students used to form maga for this. So I was myself, this thing is clear.
Because we are consolidating for 6 months. So
yes.
We can't take the full year.
No. Remove 6 months. What is the retain any as SOFP? 6 months does not have to do with that.
So I did 7,200.
Okay, so that's
70.
So at the beginning,
70,200.
I disagree. How do you get your 7,200?
Summation of the two retained earnings in the book.
Which of the two retained? If you sum the two, can it give you 7,200?
Yes, sir.
No. You would look at this analysis, my brother. Somebody asks you that, how much is in your account? So, as at the beginning of January, I have 150.
Oh, 5,200, sir.
They now pay me a salary of 350 for the year, for the month. What is the total in your account? You have 150 before. Then I pay you salary of 350. Somebody is now asking, what is the total money in your account? What will you say to the person?
So it's 5,200. Made a mistake.
5,200.
Yes, sir.
How do you get the 5,200?
The 26,200 plus 20.
Why do you add
Plus,
that one to it? Why?
because that's for the year. Why the 26,200 was for the previous year?
As at the beginning of the year, you are correct. I don't know why this one is a trap. The question will still tell you, for the year ended, for this year, we make 10,000. But as at the beginning of the year, 1st July 2014, as at the beginning, we have 14,000. I used to ask myself, how is this a trap? Before my salary, I have 150. They pay me 350. Salary for the month, I have 500. See, before the beginning of the year, I have this amount I have in my account. Then for the year ended, this year that end, we make 10,000. What is the total in my account? That's why they call it statement of financial position. What is your position? They will now split it. So they will now be confused. How? Because the question will have told me, oh, for the year ended, this is the amount. And then you say that no issue now. For the subsidiary, I will just ask 10 plus 14 plus the parent as per SOP. I will just add the two together. That's all. I will just add 26 plus 24. 26,200 plus 24. 5,200 straight. Thank you, my sister. Then for this subsidiary, 10,000 plus 14, 24,000. That's all. That's the statement. That's what is in the account. They just split it. If they don't split it, this is what they will give you. Just to confuse. Let's go to, we are done with that. Now, additional information. 1, all the information about those one have been taken care of. In the exam, just go. Anyone have finished, I don't go back. More business is seasonal, and 60% of its annual profit is made in the period of 30th of June. Let's take care of this now. Good. Let me analyze it for you. ICANN has not tested seasonal. ICANN has not tested. It is where profits are distributed evenly. They arrive to the company evenly. Now, my brothers and sisters, no retail end, no retail end, no retail end in 2 ways. Nobody will give you retail end. Which retail end?
Sir.
A DOA. Okay, yes, any question?
Sir, please, I'm sorry. I might need to take you back. I don't understand your explanation. I don't understand your explanation on the retained earnings, please. I don't understand your explanation on the retained earning, please.
Go to the question. What is the retained earning? At the beginning of the year, they will give you. Just like the question I asked you, before they pay you salary, you said you have 150,000. They now pay you salary. They pay you salary of 350 for that month. What is the total amount in your account? 500. That is what addition of the two. 150 plus when they pay you. Then as at the beginning of the year, subsidiary said, I have 14,000. The question will give you, as at 1st July 2014, for the year ended, for this year that ends, 10,000. make it 24. The same thing for the parent, he has 26,200. For the year ended, he made 24,000. How much will that be in his account? The question will tell you for this year that end, this is profit for this year, 2015.
So, sorry, just for clarification. So what you're saying currently now is that what the parent has as its retained earning is 50,200.
Yes.
If I'm correct. Then the subsidiary has 14,000. So if you're saying it's the consolidated earning, 24 rather, 24. So if you're saying it's consolidated, that means that's going to be 74,200. Is that what we're saying?
Are you adding the two together? Are you adding
yes.
the two together?
If you're
How can we add
consolidating
it together? No, we don't add consolidated retained earning. Is the retained earning of the parent, is the equities of the parent that will be in the book. It is the equities of the parent. We don't add. That is, we don't add. We never add. You cannot add the share capital of the parent with the share of subsidiary. No. You cannot add the share premium. You cannot add retain. It is the equities of the parent. The only thing that we reported under the equities is the SCR from your FRBs.
Okay, I understand. Thank you, sir.
Good. I'm not saying it further now. That no question will give you retain. Out of the 100% of the question that we said during the year, 90% will not give you retain earning as at the date of acquisition. Two ways, no retain earning at the DOA. Let's put it this way. No retain earning of subsidiary at date of acquisition in two ways. You will read throughout, you will not see. As at the date you acquire, no retain earning in two ways. The first one. During the year acquisition, the first one, when it is during the year acquisition. Second one, at incorporation. No retain, my sister. Nobody will give you retain. You have to look for it. But at incorporation, always know that the retain is equal to 0. Why? He has no work. The day he start the business, he acquire it. At incorporation, the retain is equal to 0. But when it is during the year acquisition, he acquired during the year, I will now apply this formula. I say retain earning at the date of acquisition plus year ended. Year ended profit or loss equals to retain earning at sales swap. Isn't it? I will now apply that formula. Retain earning at the date of acquisition plus year ended profit or loss equals to retain at sales swap. Don't forget, if I don't know the retain and the date of acquisition, I cannot do anything further. Why? Because I need to know date of acquisition, then the date of consolidation, minus date of will give me post-acquisition profits to share. But if I don't know the retain and the date of acquisition, how do I share? If I don't know the retain and date of acquisition, I cannot determine my goodwill. I must finish work for that place. I must finish the work for that place. I will now apply this formula now. Let it retain and let it be K you are looking for it. What is the ended profit or loss of the subsidiary? he make 10,000 naira. What is the retained earning at SOFP? 24,000. But he only acquire for 6 months times 6/12. My sister. He only acquire for 6 months. You're only entitled to 6 months profit out of the 10,000. The 10,000 is the profit for the year ended. You are not entitled to all the 10,000. You only acquire for 6. No. So I will now consolidate. I will now get K plus 5,000 equals to 24,000. K will now equals to 24,000 minus 5,000. What is our K? Return at the date of acquisition. What is K? 24 minus 5. That is 19,000. My brothers and sisters, follow me very well. Anybody that do this now fail you. Anybody that tried this, that did this with, is fail. Why? Come back next day, it's new. Why? Because the question has conditioned it. It's seasonal. This is when it is accrued evenly throughout the year. You are correct, do it this way. But additional information one has told us that the business profit does not come on an evil direction. The question says 60% of the profit. Additional information one. He said more business is seasonal. 60% of its annual profit is made in the period of January to 30th of June each year. 60% of the profits. He conditioned it again, seasonal. ICANN has not tested seasonal. It's only 3 ways this during the year can come. When profit is made, when loss is made, seasonal. What they have been testing is profit. They do not test loss. I said, you are in CR. Let's take it from the other place. Seasonal, 60% of the profits. I will now say, okay, the same thing. The only difference. Let's do it here. Say, okay. K plus 10,000 by 0.6 equals to 24. K plus 6,000 equals 24. K equals to 24,000 minus 6,000. K equals to 18,000. This is the correct one. This one will have been correct if he has not conditioned it that the 60% profits is made from January. Don't forget, January to June is the post-acquisition profits. January to June is the post-acquisition profits. January to June is the post-acquisition profits. 60% of the profits. So I'll just go retain and date of acquisition. I've gotten it to be 18,000. Go and post. Ask me a question, please.
So what we are calculating, is it the pre-return earning of the subsidiary?
Yes, yes. Who do we acquire to determine the net assets? Who do we acquire to determine the net assets? Is the sub. Is the sub. I'll come here, so don't forget items. DOA, DOC, and post. Share capital, 20,000. Retain earning now as at the date of acquisition, 18,000. It does not have other component of equity. And even as I will pick, the subsidiary does not have other component of equity. Me. Next. Next.
So please, can we see how you got the 18,000 return earning?
Okay. This is it. This one is wrong. This one is wrong. Do you know the reason?
Yes, sir.
Why this one is wrong?
Yes,
Because
sir.
the question
You
has
said
conditioned it. He has conditioned it that system, this one would have been correct if that clause was not there. The profit is seasonal. He said the profit is made from January to June. Am I going to see multiply 10,000 times 0.6 times 6/12? That is wrong. He said from January to June, I made 60%. Get the logic. If I still go and multiply this one, I still say, oh, this one times 6/12. I just spoil everything. Why? Because the question has made it clear to us that from January to June, I make 60%. Don't forget, they will not give you retain at the date of acquisition when it is during the year acquisition. Secondly, at incorporation, no problem at incorporation because he has not started work. The retain equals to 0. But when it is during the year acquisition, I must go and calculate. Oh yeah. Can I proceed now?
yes, sir, you can.
Okay, good. Next. Next. The next question says the next adjustment. Additional information 2. Okay, do we miss anything? Additional information 2. At the date of acquisition, the fair value of the more net assets was equal to their carrying amount with the following exceptions. An item of plant had a fair value of 2 million below the carrying value, below the valuation deficits, below the carrying amount, below deficits. Don't forget. Additional information too. He said below the carrying amount. What is the carrying amount? Add a fair value of 2 million below the carrying amount. That is deficit. What is the accounting entry to sit for deficit? PPE, credit minus. Reserve by how much? 2,000. The reserve, debit. I'll go and post straight. I'll go and post that. Oh, evaluation deficit in plants. 2 million. Go to the PPE. Let's go to the PPE. Go to the PPE. Minus 2 million. The depreciation issue will arise. What is the remaining life of the assets? As at know the carrying value. As at date of acquisition, it had a remaining life of 2 years. Oh, then we can get the depreciation. Depreciation done. On answer, the deficit 2 million divided by 2 times DOA to DOC, which is 6/12. From the date of acquisition to the date we are consolidating, 6/12. What does it give us? Now, please help me with the calculator. I think that is 500. Yes, that is 500. Abi?
Yes, I do.
Now, what do I do to the 500? PP, the one I've overcharged, debit. Adjusted. Retain earnings. Also, the owner of the asset, credit. Straight. Go to my financial statement. It's okay. Plus 500. Adjusted retain. Depreciation. Credit. That's all. That is clear. I'll go to the next one. B, the fair value of my investment was 7 million. C also note 5. I will ask myself, what is the carry amount of the investment? As at the date of acquisition, I say the fair value of the investment is 7 million. In answer, as you see, note 5. Before going to note 5, what is the carry amount of the investment? More subsidiary. Let me go and see. Oh, investment, financial assets, 6,000. It is now 7,000. Is it telling me? See note 5. What happened in note 5? Let me go to note 5. At 30 June 2015, the fair value of the financial asset equity investment of Peppermore were 13.2 and 7.9 respectively. Oh, that's increased further. The parent is now 13.2. The subsidiary is now 7.9. I'll post. Very simple. Let me show you. Do we see our space? Let me see where we see our space. No space. Let me open another. Okay, no problem. I'll open as many as we can. Okay. Okay. Let me open another page. Okay, we still have here a space here. Good. Investments. Equity investments has increased. As a date of acquisition, what is the, first of all, look, what is the carrying amount? What is the fair value? He said the carrying amount is 6,000 in the book, but at date of acquisition, the fair value is what? 7,000. There are increments on the investments of 1,000. I'll post investments. I will debit 1,000. The reserve credit plus 1,000 is the increment. The investment is now 7,000, not 6,000 in the book again. I'll make it 7,000. I'll go to the reserve. Investments. $1,000. It now says C notes, the investment has turned to 79 for the subsidiaries. No problem. Other increments of 900. Was 900. Making total post 19. As I started first, as I started June, 19. So to give me post acquisition to share on investments, 900. In asset for the parents, what is the carrying amount for the parents? He said the parent, let's see, the carrying amount of the parent of investments. He said it's now 13.2. What is the parent to 11.5 in the book? 11.5. It is now 13.2. See the post. 13.2 minus 11.5. Parent investments. Carry amounts 11.5. But now fair value 13.2. What is the difference? Oh yeah. 13.2 minus 11.5.
19.
One what? My son, one what?
$1,900.
Gain on investments. Yes, again. 19. Investment of the parents. I will debit 19 to bring it back to 13.2. Then the return of the parents is the owner. You will take all the gain, credit 19. Go to it. 19. Make it 13.2. I will go to return of the parents. Gain on investments. Fair value gain. I'll credit his account. 1. Next. Any question?
Sorry, sir. That's supposed to be 1,007 and one, not 19. Sorry. Yes, 17.
17. So 17. That's it. Next. I'll go to the question. Next question. Next adjustment. More own the rights to a popular brand name or brand name at date of acquisition for phone game at date of acquisition is valued that right. You are worth 12 million and had estimated win life for 5 years. Brand name at the date of acquisition. That's why I say after good we leave 2 line space. I'll come brand name 12,000. I'll go to the net assets. Brand name. I'll credit the reserve. 12,000. What is useful life when we have amortized? The useful life of the brand name? 5 years. I'll go to the amortization. Brand name as a date of acquisition. Let's start with it. Brand name at DOE. What is the accounting entry? I will debit brand name account. We'll say brand name account debit plus 12,000. I'll go to the reserves. Credit. Amortization now. $12 million divided by 5 years times from the date of acquisition to date we are consolidating. Bottom. 12 million divided by 5 times is over. What does it give us?
That's 1-2.
1-2. What do I do to the 1-2? Very simple. Brand name. Credit minus 1-2. I'll go to the adjusted. Any of sub, which is the owner. I'll debit minus 1-2. Good there.
Excuse me, sir.
Good. I'm with you.
So why are we treating the amortization like depreciation?
It's the same
Is it
thing.
okay? It's the same thing. Okay.
It's the same.
Okay.
Minus 1. Oh, good. It's the same thing. Amortization. Amortization. 1, 2. Next. The following impairment review, consolidated goodwill to be written down by 3 million as at 30 June 2015. Don't forget when there is impairment. It depends on the valuation of SCI. When there is impairment, it depends on the valuation of SCI. How do we value SCI? Look at it. Impairment. Impairment. No. Impairment. I'll ask the question. How do you want me to value valuation of NCI? If NCI is valued at fair value, at share proportionate. If it is fair value, the goodwill belongs both the parents and NCI. For share proportionate, the goodwill belongs to parents only. And if there is a parent, I will credit the goodwill minus debit minus. If it is share proportionate, that is it. It depends on, and in this question, NCI is valued at fair value. So it is fair value. Goodwill, 3,000, credit 3,000. Parent now, for the impairment on goodwill. Parent, 0.75 times 3,000. Debit. Then NCI, 0.25 times 3,000. Debit. 0.75 times 3,000. 0.75 times 3,000. Yeah, give me the code, give me the answer, please.
2,250.
For which one? Parent, okay?
For parents.
2,250. 750. I'll go and post. Even though I've not getting the value of my goodwill, I will post. Even though I've not gotten the value of the goodwill, I'm going to the parent account. Impairments. $250. Debit. NCI. Impairments. 750. I'll go and credit the goodwill, even though I've not got the value. Where's my goodwill? I'll say impairments. I've not gotten the goodwill. Impairments. 3,000. That is it. Ask question. Ask question.
So, the impairment for the parent, did we deduct from the retained earnings of the parent?
Definitely. Impairment is
Okay.
reduction of value of an asset. Definitely. He must suffer. He must deduct from his account with the parent and SCR 750. This is it. I must remove there. Any other question? Next. PEP sell goods to more at cost plus 30%. It's not PEP add, it's more add. PEP sells to goods to more at cost plus 30%. Not PEP, typing error, more add 1.8 million of these goods in inventory as at 30th June, which has yet to be supplied by PEP. Oh, there's one realized profits. Good. In addition, on 28th June, PEP processed the sales of 800,000 goods to more, which more did not accounted for until their receipt on 2nd July 2015. The in-transit reconciliation should be received, but as soon as the transaction has been recorded in the books of PEP and before the year end. Definitely to record in the books of the PEP before the year end. Don't forget, there is unsold. He said he sell at a markup of what? 30%. Initial unsold, he has 1.8 initially. He processed additional 800. He has not sold one finish. He has not sold one finish. He processed additional 800. That means the total unsold, because if the 800 goes to more, the total unsold will not be 1.8, the one in the book, plus the 800 that is in transit. Don't forget, even the one in process is at a markup of 30%, because the question has told us, it says at markup of 30%. How do I know it's a markup? Say cost plus. So if we are talking about cost, we're talking about markup. If you are talking about sales, selling, you're talking about profit margin, you're talking about margin. So what do I do? Very simple. Very simple. Look at it. We'll go to the book. What that says. That is unsold. That's inventory. The one in the inventory, he said 1.8. In transit, 800, making 2.6. What is the markup? 30%. So unrealized profit on inventory will now equals to 30 over 130, 100 plus 30 times total unsold, 2.6. Times total unsold. He has 1.8. He processed additional 800 to the one it's making 2.6. Markup 30 over 130 times unsold, 2.6. What does he give us?
600.
600. Who is the seller?
The parent company is the seller.
I will debit the parent company. Why do you sell and make profit from your subsidiary? I'll say parents. Debit. Return. Consolidated inventory. Inventory. Credit. What's the question? Inventory. Return on the parent by the seller. We debit his account. Realized profit on inventory. 600. Yes. You cannot say to each other, you are a single entity, let alone making a profit. At 30 June 2015, Pep had trade balance of 2.4 million. Give from more. Which number to the equivalent balance in more book due to sales made on 28. Oh, the trade receivable trade balance was not balance because of inventory in transit. Don't forget, say you are owing me 2.4 according to PEP. But in the book of more, it's not 2.4. Why? Because 800 has not been received, it's in transit. Don't forget, trade receivable, trade payable reconciliation can come in exam in how many ways? 3 ways. First one. Look at it. Trade receivable slash trade payable reconciliation. It can happen exam in 3 ways. First way, agreed to win. Nothing will be in transit. Trade receivable, credit minus trade payable, debit. This is the first one. Second one, total cash or inventory in transit. All everything. Trade receivable, credit by a single entity. Then the total cash slash inventory. Total cash as inventory debit. This is the second one. Third one, parts in transit. Parts. Trade receivable. Credit. Cash / inventory. Debit. Trade payable. Debit. Like this question. He has 1 the person has 800, making a total of how much? Two six. That's what you're sold. Trade receivable. Total trade receivable is 24. But 800 is in transit. Inventory. The trade payable 24 minus 800. That is it. I'll go and post. Trade receivable minus 2. Inventory in transit. Trade payable. That's the end. That's the end of the question. The next one, we have done it. That's the end of the question.
Sir.
Hmm?
Sir, please, can you explain this trade, these three conditions you listed under trade receivable and payable reconciliation?
Yes, I can. I can explain as many as I
Please, sir.
can. I can. Don't worry. We are together. Look at it here. Trade receivable, trade payable reconciliation between the parent and subsidiary. You cannot owe each other. You are a single entity. You cannot owe each other. You are a single entity. Trade receivable, I will credit. For the first one, how do we know? Nothing in transit. They both of them will agree. Nothing in transit. Trade receivable credit. Trade payable debit. Minus. Eliminate. You can't owe each other. Second one, he has transferred all the total cash. Total cash is in transit. That is the first one. That is the second one. Trade receivable credit. The total cash that you bring it in, because there's nothing we can bring in. We will debit. Then the last one, part in transit, not your total, is part. Is part. Any question? Any question? Any question? If the answer is a no question, that is the end of the question. I'm just going to consolidate. Austerity, I can get my net assets. This is the net assets. I'll sum everything together. What is the net asset date of acquisition? I will sum it. Net asset date of, what is the figure? Yes. What is the net asset date of acquisition?
49,000.
49,000. Take it to the goodwill calculation. Net asset and date of acquisition. $49,000. So what is the goodwill and date of acquisition? That will give me 1,000. Yes. As a goodwill to be reported. $5,000. Adjusted return. $24. 24 plus 500 minus 12,000.
Twenty three 300.
23,300. I'll bring it down. 10. 20,000. Yeah. 23,000 minus. DOC minus DOE. 23,000 minus 18,000.
5-3.
5-3. 5-3 plus 900. That is 6-2.
6-2.
6-2 will be shared between the parent and NCI. Share profit. Share profit. 0.25 and 6-2. That is it. 0.25 times 6-2. The parent will collect the remaining.
1,550.
Okay. Share profit. 0.75 and 6-2. 1,550. 1,550.
For the parents, 4,650.
4,650. 4,650. That is the end of the question. Yes. I will sort that together.
$52,800
Which one?
for group return earning.
The next year.
That's the parents return earning.
Yeah. This year.
NCI is 15,800.
So I'm going to check the result and the solution I sent to you to balance it up. So, let me go. Go to the PP. Right. What is the PP? I've checked the solution. I'll send it to you. Check the solution. Any question before we call it today?
So are we not going to complete the solving of the statement of financial position to know if it will balance?
It will surely come. Oh, yeah, let's
Sir?
do that quickly. Oh, yeah. PPE. Yeah, let's give. We still have like PPE, give me a figure. PPE, give us figure.
82 100.
82 100. I'll put 82 100. Next. Financial assets. Oh, yeah. Let's do. Financial. Don't forget that one is 17.
21 100.
21 100. Brandon. 12,000 minus 1 2. That is 10,800. Inventory. This will give me 3,800. Inventory. What is the inventory?
32 600.
32 600. Trade receivable.
22 400.
22. I'll go to the share capital, 26,000. That component of equity, that is 22. What is the retained earning? NCI is 15,800. What is the, oh dear, retained earning? 52,800. $52. Then the liability, current liability, it was the figure. Liability, 25,800 plus 18,100 plus 18,900 minus 16.
61 200.
61 200.
Sir Bank.
Where is bank? What if you go? 22 plus 16, that's 38. 22 plus 16. Any issue? Yeah. Let's search. What is the figure?
So I got 177,800
For which
for the
one?
total assets.
177. Let's go to the equity and liability.
Okay, sir. 177,800.
That is it. That is it. That's it. Any question? Any question? Any question for me? If the answer is no question, have a wonderful night rest. See you next week.
Thank you, sir.
You're welcome now.